E daremos início agora à primeira sessão desse evento, com o tema Global Trends. Global Trends in the Perspective of Global Investors and Exchanges on ESG, com a moderação aqui da Lucy. E estamos aqui online com o Dr. Pedro Gurrola, Perez, Head of Research da World Federation of Exchanges. Lucy, a palavra é sua.
Hello, Pedro. How are you? It's Lucy this side.
Hello, Lucy. Can you hear me?
Vocês podem pôr o áudio dele?
Can you hear me?
Yes, we can. Thank you.
Okay.
Loud and clear.
Great,
So,
excellent.
It's time, it's show time for you. So I advised everybody that we brought you to show some of the challenges and opportunities that you were seeing with the world as a World Federation of Exchanges, but in exchanges and capital markets worldwide. So we are eager to hear your perspective.
Thank you very much, Lucy. And first of all, thank you, Abrasca, for the invitation. I think it's a great opportunity. I'm very happy to be able to share some of the insights that we have at the Federation with all of you. I mean, we all are truly believers in the capital market. So anything that we do to strengthen them is very much welcome. That's part of our job too. So just to start a little bit of introduction about the World Federation of Exchanges, in case you don't know us, we are the trade association of exchanges globally. So our members are the big ones and the small ones all around the world. So we have from the very little ones in Africa or Asia Pacific to the big ones in Europe and the US. So this gives us a very wide perspective about what's going on in the world in different aspects. And of course, sustainability is one of the main issues that we've been working on for many, many years. I think we should all be proud that the exchanges and the capital markets in general, all the stakeholders involved, for many years, have been very keen on addressing ESG issues very early when it was not so much in the political agenda. The capital markets were already thinking about ways of bringing sustainability into our landscape. So I have some slides that I would like to share with you. So just let me share my screen. Hopefully you can see it. Is that working? Oh, yes, I think you can see it now. Perfect. So I'm going to talk about a little bit about some of the results that we have. At the WFE, we've been doing a sustainability survey for many, many years. We started in 2014. And the objective of the survey is to capture the nature of the extent of the engagement of the exchanges with sustainability, with the different ESG issues. And this has been very useful for us to understand exactly what is the level of interest, what are the key indicators of that interest, how demand from the investors has been changing across time, and this across different regions. So as I mentioned before, we have our global membership allows us to have a very precise idea of not only of the big markets, but also the small ones. So in this particular survey, for example, the last one that we published last year, we have a very good representation from different regions and of different market sizes, as you can see in the slides. This year we have 55 exchange groups that responded to the survey. When I say exchange groups, we should think that in the actual number of exchanges much more bigger than that, because some exchange groups like SIBO or NASDAQ, they represent many exchanges across the world. So the actual number of exchanges and jurisdictions that are represented here is quite large. So this sustainability survey initially was based in what the WFE created or published or championed in 2018, 17, which was the sustainability principle. So this was a commitment of the exchanges of working together in some very specific areas where sustainability could be measured in a way that can be benchmark against each other, and to see where the gaps were or what things were missing and how the exchanges could grow in terms of their ESG engagement. And the interesting thing about these principles, which are just 5 principles, are very high level principles, because we understand that different markets may be at different stages in their development, have different considerations in terms of obstacles or difficulties to grow their ESG offer. So the principles are very general, so they can apply to exchanges at different stages of their development. But they can be explained in very concrete initiatives. And every year we measure how the exchanges are doing with regards to those initiatives. So these are the 5 principles. So you can see they are very general. The first one is about education, how the exchanges are engaged in educating the participants on sustainability issues. The second one is about providing information, ensuring that the ESG information is available to the stakeholders. The third one is about engaging on the sustainability agenda with the stakeholders. The fourth one is about products, offering products that are contributing to sustainable finance options. And the last one was embedding sustainability into the own exchange governance and strategy. So these are the 4 principles, and each one of these principles is linked to a series of initiatives. So I won't go into detail into this, but I think the interesting, both of these graph and the previous one, the interesting thing is to observe that there's a lot of engagement of the exchanges in very different aspects. And this goes from education, providing education and assistance to investors and other stakeholders, creating or running capacity building programs, offering ESG products at different levels. The exchange also has to could produce its own sustainability report. That's an important part. How does the exchange engages with disclosures, either requiring or encouraging disclosures from their investors, from their issuers, sorry. And these are initiatives that you can see precisely how exchanges have been performing through time. And I'll stop in some of these and how they have evolved in the last years, because I think it's very representative on how exchanges have been working on this, and not only exchanges, but all the ecosystem around them, including the issuers and the companies that are listed or are traded in their markets. Some of these initiatives, for example, have to do with disclosures and with reporting standards. What type of reporting standards are being used? What type of disclosure is being required? There's a lot of information in the survey. I will be talking just of some highlights that have to do with having and some insights of what's the current state of affairs in terms of engagement with ESG. But if you have time and you want to see the whole report, I think there will be a lot of information that could be of interest to you. So going back, so let's see some of these numbers. So on the left-hand side, you have the initiatives, how they have evolved through time. So the left-hand side is the number of exchanges that have been offering, listing, or trading sustainability products. This is from 2015, was the first data that we had from the survey, till 2024, which is the last one we did. The survey for 2025 will come in January, so we still don't have the data. And also you can see that the number of respondents each year is different, so we have to account for certain variability in terms of the numbers simply because the sample changes. Some years, for different reasons, some years some exchanges do not respond, then we have mergers, and so the sample is not exactly the same, but it's very much similar in terms of the core exchanges reporting. So from the left-hand side, what you see is that there is a clearly increased trend in the exchanges that are offering or trading products related to ESG. And on the right-hand side, you see also two very interesting graphs, which are positive trend, clear positive trend. The two of them represent two elements of the initiatives that I mentioned before. One is the ESG reporting guidance for listed companies. So the question is whether the exchange offers formal listing guidance in terms of ESG for the companies, and the other line is the question whether the exchange publishes its own sustainability report. So I just picked up these two initiatives. These are two of the initiatives that we saw in the previous plot, but what I wanted for you to see is that in general, if you take, these are just two of the indicators, but overall, if you look at the general trend of the indicators, it's been positive. So what we can take away from this initial set of data is that there has been an increased engagement from the side of the exchanges in different ESG initiatives. Why are they engaged? So a question that is also interesting to ask is, what's the motivation for exchanges to get involved in sustainability? And there are many different reasons. Again, the answers are different, but the top motivations that we consistently receive are the ones that we see in the picture. So on the top, the black line represents sustainability concerns. And then you have also, I would say the next one is expand business opportunities and reputational considerations. And these have been, the percentage is already very high, but the trends are also positive. Perhaps the only one that has decreased is the desire to improve stakeholder relationships, which started with a 79 and currently is a 76%, but it's not really a significant change. So what is important here is that the main concerns from the exchanges, what they report has to do with sustainability. The main motivations of the exchanges had to do with sustainability concerns and business opportunities. If we look at the concerns, this is interesting. What's from the perspective of the exchanges, what is the main concern, or what is stopping them from progressing more on their sustainability agenda? And the answers that we get here are essentially, I mean, they vary a lot across the time window. This goes from 2015 to 2024, so it's around 10 years of data. And you can see that at the top is the lack of resources. So it's a question that has been up and down a little bit, but it's been always at the top of the concerns is the lack of resources to implement different initiatives. Below that, you can see there's the business or economic concerns, and there are other elements that are being at the top. But I think from this plot, what I would like to stress is that one concern which had to do with the lack of support from the board of directors has really decreased during this time. So that reflects the increase, increasing acknowledgement from the board of the exchanges of the importance of ESG. So it started with 8 exchanges reporting that they didn't have enough support from the board of directors, and now it's just 1. And if we think of percentages, the decline is even more significant, because we started with 8 out of a sample of 42, and now it's 1 out of a sample of 56. So it's around a 10 times decrease in that indicator. On the other side, the one that has increased a lot, and that's quite surprising, and I'm not sure what could be the explanation behind that, is the fact that the exchanges are not finding enough staff with the relevant expertise, which is an intriguing one, which I'm not sure what's behind that. But if we take into account that many of these exchanges are in developing or frontier markets, maybe the explanation could be related to the lack of enough training in those markets compared with other markets. The exchanges themselves report, they have in their sustainability report different ingredients, and these are the percentages of the different aspects that are reported by the exchanges themselves in their sustainability report. Not surprisingly, supply chain, for example, is not a big deal because the nature of the business of the exchanges is not necessarily related to, or the importance of supply chain is not necessarily high when you think about the nature of the business. But other things like risk management, health and safety, business continuity are big things in terms of their reporting of sustainability issues. Let's look a little bit at demand from the investor side. So from the investor side, we can ask, for example, how much demand from the investors we see, or the exchanges see, in terms of ESG disclosure. So on the left-hand side, you can see that the investor demand for ESG disclosure has been constantly increasing. So the trend is positive. It doesn't go above 96% simply because I don't think it can go to 100%. That will be really surprising. I think it's natural. It will stay along those 95, 96% from now on, simply because there will be always a sector perhaps of investors that are not demanding for disclosure, but the percentages are really, really high. And the trend is positive, and the percentages have probably reached their peak. So there's, especially in the last years, there's a very, very strong indication that investors are concerned about ESG disclosure. And on the right-hand side is the percentage of exchanges that respond to the survey and who themselves encourage or request ESG disclosure from their issuers. And here you can see there has been some variation. It started relatively low 10 years ago, on 38%, and it has reached 100% in the last year. So it's a very, very common, almost universal thing for the exchanges to be asking for ESG disclosure, and this matches perfectly what we see from the side of investor demand. Well, I think there is a slide there missing. Oops. Oh, that's strange. I used to have sorry, there's a slide I thought for some reason I don't see it here. You wait me a second. Okay, well, there's two slides which for some reason they're not appearing here, but doesn't matter because I can tell you the story. So the slide, one of the slides that I want to show before this one is in general the demand for ESG products. And it's a shame. Let me see if I can. Oh yeah, sorry, it was. Can you see it now?
Number of exchanges offering, right?
Sustainability products.
Yes.
Yes. Perfect.
Sustainably related bond markets.
Yeah, sorry about that.
I'm glad you bring those slides because I was going to ask you questions about the bond markets.
Perfect. So yeah, I was now moving to products, and this is one of the first slides that was missing. What happens with the demand for ESG products? So that's an interesting one too, because we're still with investors, and you see, in 2020, when we asked about demand of ESG products, there was a 15% of exchanges that said we don't have any demand at all. So our investors are not looking for us to develop ESG products. There was a 30% of exchanges that were reporting a very intense demand of ESG products, and then a 55% that saw some demand, but it was not really a lot of pressure on that. How has this changed in the last 5 years? And this is just a 5 years comparison because we don't have information of demand 10 years ago. But it's interesting that we see in 2024, the number of exchanges that report, the sample is very similar. It's 54 exchanges in one and 56 in the other. The number of exchanges that report no demand at all has reduced by half. So only 8% of exchanges, which probably is just for exchanges in this sample, reported that they don't see any demand from their investors. So that means that there's the number of exchanges that perceive demand for ESG products has clearly increased. Not all of this new demand is extensive or intense. Some of them are just on the dark blue, 64%, which is a limited demand, but still there is a growth in demand for ESG products. So this is an interesting one. If you think about the percentage where they report an extensive demand or expectation of ESG products, hasn't changed much. But what it has changed is the number of investors or exchanges that report no demand at all has reduced to half. What products are there out in the market? So, the number of exchanges offering sustainability products has increased very much. I remember in 2014 to 2015, green bonds were probably the most popular category, but there was little else besides that. And now you can see there's a lot of variety in the different ESG products offered. Green bonds still is the most popular choice, but you do have different variants now. You have of sustainability instruments, you have sustainability bonds, you have social bonds, which are catching up very quickly with green bonds. You have sustainability indices also very high on the top, ESG exchange traded funds. There's a lot of carbon markets coming and growing across the exchanges globally. Sustainable linked bonds and are also high. And then we have other instruments which are more have more regional demand or local demand. Of course, we have the Sukuk instruments, which are, you can either see them as individual or you can add them to the bond category, whatever you prefer. Green equities came out as a new instrument some years ago, and now we have 4 exchanges offering green equities. And of course, catastrophe and weather derivatives that have been along for a long time, but now they have, they also serve for their sustainability purposes in some cases. If we look at the specific area of bonds, this is a different perspective. So here we look at the bond markets, distinguishing between those that are traded, those that have a specific segment, and those that are listed, but they don't have a specific dedicated segment to be traded. Green bonds, of course, is the largest category, and you can see that there are across the world there are cases in which the bonds are traded but they are not listed. Bond cases in which they have a specific segment. The exchange has created a specific segment for those instruments to be traded, but that's not in general homogeneous approach. And finally, I would like to talk about these carbon markets. You saw this is a more granular view of what's going on with the carbon markets. As you know, in the carbon markets, we have 2 big families, the voluntary and the compliance carbon markets. The compliance carbon markets are on their a regulatory space, and they have been very successful. They include emissions. There's a big market, big emissions markets in the European Union and in the US. And then we have the other family of the voluntary carbon markets, which are not regulated. They are still, in some sense, nascent. They are a growing area. They're very small compared with the emission ones, but there are some exchanges that are starting to look at how the price discovery process in this area could be improved. Some exchanges are already offering derivatives in carbon credits, in voluntary carbon markets, which are the carbon credits, and there are some platforms that are offering also trading of voluntary carbon markets. So this is a market that's quite interesting, and the case of Brazil in particular is interesting because many of the projects, of the carbon projects that are traded globally, are originated in Brazil. So this is a market where that in general we're trying to understand a little bit better. At the moment is mostly OTC, so there's a lot of problems in getting data and understanding more about how price discovery happens and what are the different participants, etc. And we at the WFE we have doing research on that, and we're doing trying to contribute to understanding how these markets are currently operating, what can be done to make them more liquid, more efficient. There's a lot of potential in those markets. And finally, just some final thoughts before finishing. First of all, I think that in general, if you look at the indicators, they confirm that there's a strong engagement from the exchanges and from the, in general, the ecosystem around the exchanges on sustainability issues. There's demand for sustainability products from the part of investors. There's demand for additional disclosure. The obstacles are reliable data. There are lack of resources and economic concerns. Interesting, this year we included in the survey, we asked a question about the changing political landscape, and it came out as one of the main concerns of the exchanges around the world. And of course, this has to do with the prevailing sentiment globally, which we all know is changing. It has different impact across jurisdictions. Clearly, in the US, we see that there's some states within the US that keep, a strong position on sustainability. In the European Union, what we have seen is an interesting move to reduce regulatory burden, reporting burden for the firms, which I think it's been a very positive move with the omnibus package. The rules for disclosure have been simplified with the aim of stimulating competitiveness and attracting investment. And in general, I think that the impression of the conclusion we get from the survey is that globally companies have continued to look at the opportunities that brings transition toward a more sustainable business model. And regulators are also, especially in the European Union, taking note of that. So saying that, I'm open to any questions that you may have, and thank you very much.
Thank you, Pedro. Let me just ask the audience if anyone has a question. If not, I have a question. So before you started talking, we just had a comment on financing the transition, as we say here in Brazil. As you know, Brazil has just completed COP30, so we are very excited, companies are very motivated, but putting this all into like the financing in a context with what you brought, and knowing that exchanges are not that necessarily finance, but are the ones that create, in most times, environment or alternatives or products to finance whatever we need as a capital markets, as a society. How do you see, now it's the question, how do you see exchanges working with issuers, with the companies, to create alternatives to do the transition and the financing? It's somewhat concerning when you show data saying that, yes, exchanges are working on that. A big number of the exchanges, if I'm not mistaken, 56 of the exchanges are working on that, or 46 of the exchanges are working. But as a society, we don't see much alternative for carbon, for instance, and we just see maybe green bonds that are the traditional instruments, or even ESG-related bonds, but not carbon, which is tackling exactly on the transition side. Do you see a move from the exchanges to create platforms or regulated alternatives to bring carbon to the exchange business side?
Yes, thank you. I think there have been. I think all the exchanges, well, not all the exchanges, but many exchanges are looking at this carefully. There are transition bonds, which are some, may address a little bit of that problem. But with regards to carbon, I think the main problem there, well, there have been a few issues that we may think about. One is a question of, during the last years, there have been some cases that were reported in the press of carbon products that were not doing what they were expected to do. So projects that claim to be reducing certain amounts of carbon emissions, and it turned out that if that was not the case, that either the reporting of those carbon emissions was not reflecting the reality of what was happening on the ground, or the audit of those credits was not properly done. But there has been, in the last years, there were a few cases that were reported on the press where the carbon credits were not doing what they were expected to be doing. So it was, and that hurt a lot the market, because investors then withdraw from that market, because the credibility was affected. So that's one issue. So one important thing is that for these markets to operate properly, you have to have a trusted entity, and that's where exchanges bring, or can bring, a lot. Exchanges, regulated markets, essentially what they provide, of course, they provide liquidity, they provide a price discovery process, they allow investors to connect with issuers, they allocate capital in the most efficient way. All this happens, but I think that one fundamental element that the capital markets bring is trust. So people go to the exchange because the exchange guarantees that whatever is in their platform has gone through a detailed assessment, and it's not the investor that comes to the markets know that he can trust the markets. And we see that there are other markets where this doesn't happen, and investors end up in having some pain. I don't want to go into that, but we know about crypto markets, for example, what are the failures in that direction. So trust is fundamental. And going back to the voluntary carbon markets, this is where the exchanges can bring not only their knowledge about how to operate a trading platform, but also the trust that they have built after many years that's doing this work. So that's another thing. But then there's a third element which I think makes it a little bit complicated at this stage, and has to do with liquidity. So carbon projects, the carbon credits are linked to projects which may be very different and very difficult to standardize in many cases. So for the investor, I think there's a lack of transparency when they come to the market and want to buy credits, or to the firm that wants to buy credits to offset their carbon emissions. they find themselves with a variety of prices and a variety of projects, and it's sometimes difficult for them to see whether a project which seems similar, but it's happening in Brazil, or a project that it's similar to a project in other parts of Africa. They're probably both reforestation projects, for example, that generate carbon credits, but they have very different prices, and it's not clear for the general investor where the difference in price is coming from. So there's a question there about pricing, which affects currently a lot of those markets, and that makes them quite illiquid. And if you have a illiquid market, then it's very difficult for to build all the ecosystem that an exchange creates when it comes to trading an instrument. So I believe, I think that's very much the impression of our members, is that it's a question of time. It's a question of solve some of these issues, bring credibility to the markets, ensure that there's a standard or a benchmark so that investors can know exactly how to price their projects, and build up liquidity. And when you build up liquidity, then you will have more investors coming to the market.
Great. Just one final quick thought. It's very interesting to see that risk is at the top of the respondents in one of the slides that you showed. We had discussions here before your panel started to talk about the importance and the perspective, or the central perspective, that risk has on whatever ESG matters and all the other things that come with that. Are you seeing risk, other than the answers that you get in the questionnaire and in the survey you have, but are you seeing increasing risk and reporting of this information as an initiative that is widespreading worldwide? Because we are seeing this in Brazil. There is demand. Companies are getting prepared and working very hard to have it prepared. But we see that sometimes this is more an effort in Brazil, as we don't hear this coming from somewhere else, especially when you talk about IFRS S1 and S2 sustainability reporting. So what's your perspective on other countries adopting, or companies from other countries adopting this type of perspective on transparency, to sustainability?
Yes, I would say that it's not homogeneous. In many areas, they are just starting to think about it. But there are markets where this is already an important topic, and it's included in their reporting standards already. Yeah, I think it's a slow process, perhaps, but it's certainly something that's more than one market is looking at that in detail. And I don't know exactly what's driving the interest. Probably very much linked to how much close or how much affected you feel from climate change, because of course that's one of the triggers of potential risk. If you are thinking, in the case of exchanges, has been very much a continuous topic for risk, for thinking about potential risk, the risks that there's a flooding, or there's elements that were previously not considered, but now are part of the landscape, of the potential landscape of scenarios that you need to consider when you stress test your resources. Your risk management framework now in many cases tends to include these stress scenarios where you think about potential situations which could dislocate your business, your exchange or your clearinghouse, situations in which you may find yourself not able to rely on your main database, but you have to go to your to your backup, etc. So there's a lot of interest in this. At the WFE, we have a specific group that looks at these issues, and they are very active. So I can guarantee that it's not only I mean what you mentioned, but there's a wider concern about new risks or potential risks that may affect the capital markets.
Okay. Thank you very, very much, Pedro, for making the time to be with us online and bringing the perspective of the exchanges worldwide working towards ESG. We're happy to see we're not alone. This is the group of demanders from our side and the companies that are committed to it. So it's very thoughtful of you bringing all this perspective and enriching our discussion here. Thank you very, very much.
No, thank you all, and I wish you a great rest of your ESG day.
Wonderful, thanks.